All right, Julie, let's get more into these numbers. Inflation in December rose 6.5% year over year, its slowest annual increase since October 2021. Let's bring in Yahoo Finance Fed correspondent Jennifer Schonberger for more on what this report might mean for the Fed and what it might not mean. Jen.
Good morning to you, Brian. Headline inflation, I should say, slowing down for the third month in a row in December, though still remaining high overall. If you look at the consumer price index, that fell, as you just noted, by 0.1% last month, though rising 6.5% year over year. That's right in line with estimates. The big driver of that, a slowdown and drop in gas prices, which offset housing prices. But if you strip out those volatile energy and food prices to get that so-called core number that the Fed looks at, core rose 0.3% in December after rising 0.2 in November, so inching up a bit month over month. Year over year, CPI up 5.7%, in line with estimates, both of these, and down from the 6% seen in November. Now, the cost of shelter, that's rent and homes prices that we pay, that was the main driver of core CPI. And shelter rose a hefty 7.4% last month, the rent index rising 0.8% over the month. Now, the key metric, the one that the Fed is focusing on in this report, is services inflation excluding housing. That rose 0.4% month over month and 7.4% year over year. So that is still quite sticky. If we zoom back out, inflation clearly slowing down last month and over October and November. So now we've got a full quarter where inflation seems to be slowing down, perhaps underscoring that the Fed's rate hikes are starting to work to slow down inflation. And this could help the Fed feel a bit more comfortable and perhaps moving by 25 basis points at its February 1st policy meeting versus 50 basis points. But it would still likely be that they expect the Fed funds rate to peak above 5%, as was projected back in December. Now, we are getting some comments just 15 minutes ago from Philadelphia Fed President Harker, who was speaking in Pennsylvania this morning. And he says that those eye-popping numbers on inflation that we saw in 2022 are likely in the rearview mirror, and that moving ahead, 25 basis point interest rate hikes would likely be appropriate. Now, these comments were prepared before the CPI report, so take that as you may. But at least one member of the Fed, the Philadelphia Fed, is saying that he thinks 25 basis point rate hikes makes sense going forward.